Let's talk about three things that Tesla needs to do right now to return to profitable growth. Welcome back to Chipstock Investor. We have another great episode from earnings this week that we're going to talk about. And this one is based on viewer requests. So we're going to talk about Tesla today.
Yes. Yeah. Your favorite CEO.
Yeah, something like that.
Kasey, I also see you're rocking a new hat.
I am. This one comes from our Chipstock Investor merch. And I got this one because it reminds me of Frank Rossitano from 30 Rock.
That's a less than flattering picture. You look great.
One of my favorite characters. All right.
Yeah. Your favorite CEO and your favorite TV character. Folks, if you're not picking up on the sarcasm, there's your hint.
All right. Let's talk about Tesla and one of our favorite CEOs, Elon Musk. Tesla has been seriously bogged down in the last few quarters, and the picture has been muddied by all sorts of distractions. Putting the controversy around its CEO, Elon Musk, aside, it's clear that Tesla is no longer growing vehicle sales. That is going to be the number one priority for Tesla going forward, right?
Yeah, absolutely. That is priority number one. If we could zoom out for a quick second here and address why we've never done a standalone Tesla video until today, this boils down to two questions that we get asked fairly frequently. First, this is probably more from the folks that have a bearish thesis on Tesla. Why talk about this company at all on this channel in the first place? The simple answer, it's a tech giant. But Tesla designed its own autopilot chips. It hired Jim Keller to do so. Look him up online if you don't know who that is. He was the VP of autopilot hardware engineering for 2 years back in 2016 to 2018. Second question, why don't we cover it more frequently? The answer, like you just said, lots of controversy around this company. Tons of investor emotions tied up, some from bullish theses on the company, some from bearish theses on the company. And the level of emotion comes with this company, paves the way to making terrible investment decisions. We don't want to make terrible investment decisions. This is a growth business. You can decide how you want to categorize it: automotive company, robotics company, energy company, whatever. But we're going to focus on three things the company needs to fix. And one thing that doesn't need fixing, though, that the media seems to continue to just hammer on, is that the EV industry is somehow like broken. It's not growing anymore. And nothing could be further from the truth. So the sales that you see on the chart there, orange is China. That's the big section of the bar. China, far and away the world's largest market for electric vehicles. Europe in blue, the US in mint green, and then the rest of the world in gray. Lots of geographies around the world still haven't even been touched yet, but you can see still at this early stage of the game, research from the IEA expects upwards of 1 in 5 new cars sold in 2024 will be an electric vehicle. Still very much a growth industry, regardless of what the pundits may want you to believe for their own agenda or viewership metrics.
And here's a slide from Tesla's investor deck at the earnings call that shows basically the same thing: the global adoption rate for electric vehicles, China a huge portion of that, and the rest of the world in blue.
So long story short, this is still a growth industry. Looks like up about 25% year over year. Growth has slowed down. It has cooled. But given Tesla's size, as well as the sheer volume of people interested in a Tesla or an EV, you can't simply just blame the price of a car or the interest rate to finance one as the end all be all, right? There's something else going on here as well.
No, absolutely not, Nick. Tesla has a number of things going for it that may be holding back consumers from purchasing a vehicle right now. The first thing is a refreshed Model 3, which was mentioned on the call. Elon Musk said it's significantly different than the last models. Consumers that are planning on purchasing this car will just wait until they can get the new refreshed version. Of course, the Cybertruck, many customers are still waiting for their pre-ordered Cybertruck. And with all of the issues that it's currently having, they're not getting it yet. Until those problems are fixed and people are able to take delivery on those Cybertrucks, again, going to have a problem. And then finally, there is a promise of a mass market affordable model, something that's under 25,000 US dollars. So if you're waiting for something that's much more affordable, you'll be waiting for that vehicle.
No single reason can be conveniently used to sum up all of the problems. Certainly not any of the drama surrounding Elon Musk either. But at the end of the day, the summation of all of these things is lower revenue, which we already knew was coming for the first quarter. Tesla showed that production chart, which we'll bring up here in a little bit, but higher production, lower sales, which means lower realized revenue. And of course, like any manufacturing business, whenever you have lower sales, your profit margins are susceptible to taking a hit. So you can see that in this chart from our friends at Main Street Data. And then this one on their gross margin, dropping a little bit again sequentially, 17.4% on gross profit margin, operating margin down to 5.5%, which is the lowest it's been since early 2020. Of course, that was the last time Tesla reported a drop in revenue when the pandemic started.
With all of those things in mind, let's talk about 3 things that Tesla needs to do right now to return to profitable growth. Let's talk about the first issue, the Cybertruck.
As you already mentioned, the company is still very early on in ramping up production of the Cybertruck. They're behind schedule. Of course, we had the recall on Cybertruck in recent weeks on the accelerator pedal. Not a good look, but early on, we're basically in another round of production hell. It's a bit frustrating. At this point, Tesla has experience getting several new vehicle models up and running. You'd think that Cybertruck would go a bit more smoothly than these production ramp ups have gone in the past, but that's not the case.
When discussing this on the earnings call, the vice president of vehicle engineering, Lars Moravi, said that the Cybertruck is at 1,000 a week just a couple of weeks ago, but they know that the volume production is what matters. And he says the ramp still faces a lot of challenges with so many new technologies, some supplier limitations, and continue to ramp this year, just focusing on cost efficiency and quality. So Tesla running into a lot of new manufacturing headway.
This is an issue for a manufacturing business. When you fire up a new manufacturing line, it costs money. And until that thing is hitting full production, it bleeds cash until you reach it to a certain scale that it starts to break even. That's one of the big reasons for the gross profit margin drop in the last couple of quarters, especially. We will see these profit margins start to improve, hopefully, as we progress through the year. A quick little Elon Musk quote from elsewhere in the last earnings call. When asked about 2024 growth, he simply said, "I think we'll have higher sales this year than last year." Pretty simple. There's pretty clear upside if they fix the Cybertruck issues as soon as possible.
Let's move on to point number 2 that Tesla needs to fix: unveiling a new, more affordable car. A 25,000 US dollar vehicle will be announced August 8th, 2024. Elon said what was originally a second half 2025 production ramp up could now possibly be a first half 2025 or even a late 2024 production. These promises remain to be seen, but let's focus on what the Model 3 refresh brings to the table right now.
Yeah, that's right. As you already mentioned, Kasey, a lot of consumers might have been holding off on buying a Model 3 until this refresh came out. They are now getting those off the manufacturing line in Central California. You can lease it for as low as $299 a month. In the US, Elon has promised this is actually a completely different car. Not only does it look different, it is more than just cosmetic. It also feels different when it's being driven. One thing it looks like that they've been doing, along with the Model 3 refresh, is trying to squeeze out extra costs of production to help keep those Tesla profit margins in positive territory. And there has been one benefit, which we've been covering for a while now is the lithium market. Lithium prices were ridiculous back in 2022 when they last peaked. But again, as we've been covering as of late, when we talked about Albemarle and Arcadium lithium, is lithium prices have come down. There's excess supply at battery manufacturers and auto manufacturers. And so now, with demand down, the prices on a lot of these batteries have also fallen. So Tesla taking advantage of that, getting some much more competitive prices from their suppliers on the batteries than in the recent past. So problem number two that is getting worked on, being fixed as we speak, this right here, Model 3 refresh, hopefully another one later this year or 2025.
Point number three, Tesla can start robustly monetizing all of the AI compute that's been installed. Tesla is not just an electric vehicle company. They have a lot of different applications for their AI that they have developed. Elon Musk noted that they have installed and commissioned 35,000 H100 computers or GPUs. He expects that there will probably be 85,000 or thereabouts by the end of this year in training, just only for training. They're making sure that they're being as efficient as possible with training.
Yeah. And when it comes to this AI training, of course, what comes to mind is, of course, Dojo, which NVIDIA showed not a rendered a picture of here on their earnings slide deck. Very futuristic looking. I'm not sure exactly what we're looking at here. I think these are some of the specific blades on the racks within the data center. Anyways,
we just know it's not AI generated and not rendered. That's all the information we have.
Yeah, that's it. Let's maybe talk about what that means for the financials. As we already mentioned, capital expenditures, spending on property and equipment has gone up. You can see that on this line item. They're close to the bottom, almost 2.8 billion in capex in Q1, which helped contribute to the negative free cash flow reading of negative 2.5 billion in the quarter. That number should improve in the coming quarters. Tesla thinks it will get back to free cash flow positive territory. Free cash flow can be a very lumpy metric, so there's no point in getting too worked up about that negative reading here in the last quarter. We do know, though, that CapEx probably flowed directly into NVIDIA's revenue line item for this AI training. So back to the fix, Kasey, what can Tesla start doing to actually monetize all of that AI infrastructure that it's purchased and installed?
One thing that we can talk about is supervised full self-driving for currently $99 a month. And that's really a feature to sell more cars versus competitors. It's possible that a ride-hailing and robo-taxi app will indeed be a thing, but we just can't rely on that to totally offset the AI expense, at least not yet. But there is possibly a solution that is coming.
Yeah, that's right. And this actually consumed a bit of time on the question and answer session. Elon said that Tesla is in conversations with one major automaker regarding licensing full self-driving. Tesla has built this impressive ecosystem of technology. It gets monetized via the sale of cars right now, a little bit from the sale of energy. But this is one way they can unlock more value from all of their R&D, at least as far as what was alluded to in the call, that this automaker that Tesla is in talks with is maybe they're just going to use the same cameras and inference computer that Tesla has developed for its own cars. And then Tesla will license the FSD software. But if a deal were signed right now, Tesla says that it probably would be like 3 years from now that this hardware and the actual FSD software would show up in the actual car models. Elon also continued to say that they're in advanced talks with one automaker. Maybe there are a few deals that could be signed within the next year or so. This is maybe not so much a short-term boost to Tesla's revenue, but one that maybe could start to contribute in the midterm, like maybe over the next couple of years, if they do sign that deal and then start selling equipment and software licensing to that company to incorporate into their own vehicles. But this is a big, important fix. And really, just to highlight this, I'd like to share the slide one more time. Tesla is undergoing some growing pains. It's in decline for the first time since 2020. That being said, there is a path to them returning to growth. And it's the three things we just mentioned: fixing the Cybertruck issues, getting those more affordable cars off the manufacturing line and into the garages of consumers, and figure out a way to monetize all that AI infrastructure, because we already know that cloud-based computing infrastructure is ridiculously valuable. Amazon AWS and all of the other tech giants that have cloud infrastructure installed have already proven that. Tesla has it as well. It's time to start unlocking the value from all of that work. We should start to see revenue and operating profit margins improve. We think 2024 could be some sort of bottom for Tesla.
So are we making any changes to our portfolio based on our analysis this quarter of Tesla?
At this point, this is maybe a nibble for us, a very small nibble, just like it was last quarter and the quarter before that. This is a pretty small position for you and I personally. Let's just call it like it is. Like any other growth business, we have quite a few of them actually at the moment, right, Kasey, that are undergoing some growing pains. Air Test Systems is one of the companies that we own that's involved in this automotive technology supply chain. It's also possibly bottoming out right now. And all during a downturn, we like to nibble on these stocks. We don't like to try to call a bottom, but we'll take a dollar cost average approach to some of these and buy in batches. I don't think we're going to take a dollar cost average approach to Tesla in particular, but maybe this one is one worth just maybe adding a little bit to our position. And then from here, watching to see how they make progress on those points that we just outlined.
All right, there's our take on Tesla for this week. If you have not already, the free and easy way to support us is to hit that subscribe button, and we really appreciate it from all of our viewers. And again, if you are interested in having Discord access where all of our published show notes are available, included in your membership, check out the Join membership here on YouTube or over on our Ko-fi page where you can get access to that. And if membership is not your thing, make sure you check out our Ko-fi shop where we have all of our published manuals. We'll see you all again very soon with more earnings updates here at Chipstock Investor.